Imagine doubling your money in just 5 years without the need to bet on risky or volatile stocks. Sounds incredible, right? Today, we will explore 5 dividend stocks that can easily double your money in 5 years. They all have great foundations and are good for investors to buy and hold for a long time. Dividend investing is one of the most reliable strategies to generate passive income. But what the real power lies in is combining good dividend yield with high growth potential. This combo can supercharge your returns, allowing you to grow your wealth steadily and securely over the long term. Before we dive into the stocks, let's first establish the criteria for selecting them. The first key factor is growth. Since we're aiming to double our investment, the stock must have a solid growth potential. Stocks with minimal growth simply won't meet this goal. Second, while a strong dividend yield is typically desirable, in this case, we're willing to lower the threshold. A good dividend yield is usually around 3% or higher, but for our strategy, we'll set the minimum at 1%. This is because high growth and high dividends rarely go hand in hand. A company that consistently offers significant dividends often sacrifices some growth, as these two factors tend to be inversely related. With these criteria in mind, let's take a look at the stocks. Number 5, we have American Express with the ticker symbol AXP. This is a global leader in payments, best known for its premium credit cards and charge cards that cater to affluent individuals and businesses. What sets American Express apart from traditional card issuers is its unique closed-loop network. This means the company both issues the cards and processes the transactions, allowing it to capture revenue from both ends of each transaction. As a result, American Express can generate higher fees per transaction than competitors like Visa or MasterCard, who only handle one side of the process. American Express has a strong presence in travel and lifestyle services, offering cardholders exclusive access to luxury travel benefits, concierge services, and rewards programs. Its diverse revenue streams, which include interest income from cardholders, transaction fees for merchants, and annual membership fees, contribute to a stable and highly profitable business. This combination of premium services and higher transaction fees positions American Express as a valuable player in the financial services industry. A key reason to consider investing in American Express is its ability to attract younger generations. Gen Z and millennials now make up 60% of the company's new clients, positioning American Express to potentially turn these customers into lifetime cardholders. The current dividend yield is 1.10% and backed by the annual dividend growth rate of 10.76%. It is a very impressive dividend growth. The share price appreciation was 16.59% per year in the last 5 years. Based on this data, your original investment would be almost doubled in 5 years. A $10,000 investment would become $19,125. Number 4, we have Novo Nordisk ADR. Ticker symbol NVO. Novo Nordisk is a global leader in the pharmaceutical industry, renowned for its expertise in diabetes care and other chronic diseases. The company's flagship products, such as Ozempic and Wegovy, have revolutionized diabetes and obesity management, two rapidly growing global health issues. Novo Nordisk's dominant market position is supported by its commitment to innovation and a strong pipeline of groundbreaking therapies. With operations in over 170 countries and a constant flow of new treatments under development, the company is exceptionally well positioned to capitalize on the rising global prevalence of chronic conditions. On the dividend side, Novo Nordisk offers a dividend yield of 1.06%. While the yield may appear modest, the company has shown a solid commitment to rewarding shareholders through consistent dividend increases. Over the past 5 years, Novo Nordisk has achieved an impressive dividend growth rate of 18.72% per year, reflecting a strong financial performance and disciplined management. The share price appreciation was 38.46% per year in the past 5 years. Based on this data, your original investment would be almost doubled in 3 years. A $10,000 investment would be $19,437. If you guys like this content and find it helpful, please hit the thumbs up button and subscribe to the channel. Thank you so much. Now, let's move back to the stocks. Number 3, let's check out AbbVie, ticker symbol ABBV. This is a biopharmaceutical company that dedicates itself on finding new treatments for serious health problems like cancer, arthritis, and other diseases. AbbVie consistently invests billions of dollars annually into research and development to create life-changing medications. In 2022, the company invested $6.5 billion, followed by $7.7 billion in 2023, underscoring its commitment to innovation. Some of the best producers are Humira and Botox. Humira is developed for treating rheumatoid arthritis, and Botox can be used for cosmetic and medical usage. Even though both patents have expired, they are still making good revenue for the company. In 2023 alone, Humira generated $14 billion and Botox made $2 billion. In the meantime, AbbVie is still developing new treatments in many fields such as infectious diseases, HIV, and pulmonology. Its new immunology drugs, Skyrizi and Rinvoq, are projected to play a critical role in the company's future, with an expected combined revenue of $27 billion by 2027. The current dividend yield is 3.21%, and the dividend growth rate was 8.01% in the past 5 years. The share price appreciation was 23.53% in the past 5 years. Based on this data, your original investment would be doubled in 4 years. A $10,000 investment would be $20,131. Number 2, let's check out Lam Research, ticker symbol LRCX. Lam Research is a major player in the global semiconductor industry, known for providing advanced equipment and services used in the fabrication of advanced chips. 2 key areas where Lam Research excels are etching and deposition. These are the essential processes for making chips. Etching is like carving tiny patterns into the surface of a silicone wafer, which is a key material used to make chips. These patterns form the circuits that allow chips to work. As chips get smaller and more powerful, the patterns have to be extremely precise. Deposition is the process of adding very thin layers of material onto the wafer, which helps build the different parts of the chip. Both of these steps are crucial for making the increasingly small, fast, and efficient chips that power modern technology. Lam Research's equipment ensures these processes are done with great accuracy, helping to create the chips that drive innovations like smartphones, AI, and cloud computing. Major global chip manufacturers like Taiwan Semiconductor Manufacturing, Intel, and Samsung rely on Lam Research's expertise, as they are responsible for producing the majority of the world's chips. With the growing demand for high-performance computing, cloud infrastructure, and Internet of Things devices, Lam Research is well positioned to benefit from the expanding digital landscape. The current dividend yield is 1.20%, but it stands out with an annual dividend growth rate of 12.70%, signaling its commitment to return value to shareholders. The share price appreciation is 29.17% per year in the last 5 years. Based on this data, your original investment would be doubled in 4 years. A $10,000 investment would become $22,063. Number 1, we have Taiwan Semiconductor Manufacturing with the ticker symbol TSM. While it may not be as widely recognized as brands like Nvidia or Apple, this company plays a critical role behind the scenes by producing the advanced chips that power their devices. In fact, both Nvidia and Apple rely heavily on TSM for their chip manufacturing, making them key business partners. Majority of the advanced chips we are using today are actually manufactured by this company. TSM's near monopoly over the advanced chip market gives it significant pricing power, much like Coca-Cola, which can raise prices without losing customers. This strong market position has helped the company maintain a high profit margin of 52%. Warren Buffett bought some stocks back in 2022, but he soon sold most of them because of concerns about the potential China may invade Taiwan. He wasn't wrong about it. Now, Taiwan is actively constructing new plants in Japan, the US, and Germany to minimize the risk. Looking ahead, the demand for TSMC's chips remains strong, driven by advancements in artificial intelligence and high-performance computing. The current dividend yield is 1.37%, and the dividend growth rate is 9.78% in the past 5 years. These are very impressive numbers. The share price has appreciated by 32.53% in the last 5 years. Based on this data, an initial $10,000 investment could potentially double in just 4 years, growing to $23,853. These 5 stocks have the potential to double your money in 5 years. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.